Broker Bulletin acknowledges the traditional custodians of all the lands across the country on which we record our podcast and pays its respect to all Aboriginal and Torres Strait Islander people. Welcome to the Broker Bulletin podcast, where better begins. Join us as we chat with brokers about what's working for them, what drives them, and the real challenges and wins that matter most right now.
Welcome back to the brand new episode of Broker Bulletin. Many of us know the difficulties self-employed clients can have in getting home loans approved, but there's definitely some ways to make it more seamless and easy process, not for only the client, but for yourself. Today, we're talking about cracking the code of the faster approvals for self-employed clients. To unpack this, we have joined in the studio by the head of credit of Apollo, Jacqui Kelleher. Jacqui, thanks for taking the time to join us.
Thanks for having me, Jason. I'm really looking forward to this and being able to help some brokers crack that code.
Before we get started, Jacqui, can you just share with us a little bit about yourself?
So I'm the head of credit for Apollo, and what my job is I actually write the policies for Apollo for their home loans. So I'm the one that decides what those self-employed policies are and works with our funders to get them approved and things like that and look after the credit strategy.
Excellent. So I've met the right person.
You have.
Why is it so hard for a self-employed client to get approved despite being a business owner?
That's a really great question, Jason, and you're right. Business owners employ people and we treat them as PAYG, and there's no difficulty there. So I'm actually not really sure, but I think a lot of it is brokers think self-employed customers are complicated, trying to understand their income stream, how they operate and things like that. And a lot of lenders think that self-employed customers are a riskier customer base. So that sort of drives the difficulty in getting them. At Apollo, we don't think like that at all. We'd give a loan to someone who they employ, so why shouldn't we give a loan to them?
I agree with you when we talk about when a broker comes on board, because I've got a few brokers in the office and same thing where they come in and when a self-employed client walks in the door, they kind of back away and they get a bit scared. Tell me a bit more why they think that.
I think it's because it's understanding the income. So you're not just looking at a payslip, which in my opinion, I'd rather look at financials 100 times versus a payslip because they can be very complicated. But I think for a lot of brokers, they're more used to looking at payslips and looking at financials, understanding the different types of business structures that customers operate in, what income they can use. If the business structure has got loans, what loans you need to include and things like that. It just all becomes a little bit complicated for them. So it's easier to say, stick with what they know, which is their payslips and things like that. So I think that's part of the reason why brokers tend to back away from it.
Yeah, it's also because there's multiple ways you can look at financials and different banks look at it differently. And
that's right. I think like financials, once you've got them, they don't all look the same, but they all have the same information in there. Most lenders look at the income the same way, but it's about understanding what types of income can be used. So like, for example, if you're a sole trader, you're entitled to all the income that comes out of the business, but you're also responsible for any loans that the business has. If you work in a company, you're entitled to only the income that the percentage of the shareholding that you hold. So it's about understanding the different types of structures and then about the income you can use. The benefits of a company is, particularly at Apollo, you don't actually have to include the loans from the company. So we don't include company debt in our assessment unless you want to add back the interest.
Excellent.
So if you don't add back the interest, then you don't have to add the company loan because the company's a separate entity and it's their loan.
What do lenders actually look at when assessing self-employed clients? Are there key factors that make an application stronger?
Some of the things we look at is we look at how long has the business been in operation and what's the experience of the customer who's running it. So have they been in that industry for a long period of time? Do they have a lot of background behind it? We also look at their financials. So looking at things like, are there one-off expenses the customer might have? So if they had a large bad debt written off in 1 year, what was the cause of that? Is it likely to continue? Because that could be an indicator that the business is in trouble. And if we're going to use the profits, which at Apollo, we have a number of different ways you can look at self-employed, and one of those does include not using the profits. We want to look and see that the profits are sustainable. So are they going up? Are they going down? How is the business trending? Which is part of the reason why a lot of lenders like to look at 2 years, because that does give you a trend of how the business is operating.
So what you're saying at Apollo, you can look at it in two separate ways. You can look at it where you take the net profits, or you can take it and look at it in a way where you only take the individual income.
Yeah, so we actually have 3 ways to look at self-employed income for Apollo. So we have the 2 years financials where we're taking the profits that the customer has. And even with those 2 years, you can actually use 1 year in isolation because we also understand as a self-employed customer, sometimes you might have a year where something goes wrong, something happens in your personal life. You might decide to take time off to have children. So we say, okay, well, we can just exclude that year and look at 1 year in isolation. And it doesn't have to be the most recent year. It can be the previous year that we're looking at because you decide to have a baby this year. We also have the simple self-employed, which is just using the salary that you pay yourself from the company. So you're basically treated like a PAYG customer. And then we also have our light doc option, which is an income declaration supported by an accountant's letter and BAS. So we like to make it easier for our self-employed customers. We understand that they should be treated similar to a PAYG customer.
So when you take 1 year in isolation, is there anything that needs to be, besides an explanation, is there anything else I need to add on top of that, like an interim or BAS statements or? No,
you don't have to give us anything. Just give us an explanation of what's happened, depending on what the explanation is and how detailed the notes are. One of the things we do love to see is a really detailed broker notes. You know your customer best, and we like to know your customer as well as you do. If the explanation's not that detailed, we might ring and ask for questions, and we might get a few BAS statements to support it, but it's not necessary. It would depend on what the reason is. And definitely, I've seen them where the customer took maternity leave in the most recent year, so they were off for 9 months, and you could see that reflected in the sales and the profit that the business was making. So it was an easy explanation to say, yeah, that makes sense. They're back at work.
What are the biggest mistakes brokers make when structuring a self-employed application? How can we avoid it?
I think not understanding the business structure. So how does the customer operate their business? As I mentioned, if you're a sole trader, you do have to include the liabilities from that. Some of the other things that we see is not understanding your customer's credit report and how the business has performed. So at Apollo, we will run a check on the company, not a credit check, a company search, but that company search does tell us if there's adverse information on the bureau report for the company. So then we'll come back and ask for some information. We actually recently had an application where the company had a default registered on their name that they didn't even know they had. And we went back and spoke to the broker and said, hey, did you know the company had this default? And the customer said, no, I thought that had all been sorted out. Hang on, I'll fix it up and pay it for you. And then we were able to do that application for them. So that could have been something that fell by the wayside.
With a good explanation, obviously.
Yeah.
So it was one of those.
So they gave us an explanation of what had caused it, advised us that they didn't know that it had progressed that far, fixed it immediately. And we would say, okay, happy to move on with that.
Excellent. Okay, if a broker has a client with complex financials, what are some of the practical ways to strengthen their application?
One of the most practical ways is, particularly when you've got multiple structures and income flowing between different structures, is to do a family tree. I'm a very visual person, so I like to see pictures and like to understand how the income flows. And I think for a lot of brokers, that helps them put the deal together as well, because that will help them work out what income they can do. So do that family tree. If you're not sure how to do it, a lot of accountants will already have that information. So you could talk to the customer's accountant or talk to us and we can go through. I remember we launched the tailored Apollo Plus deals products last year. One of the first deals that we did when we were doing the pilot, I actually sat down and drew a picture because I was doing them all. They were very complex and it was just draw that picture out, work out how the income's flowing, who do I need to involve in this application, who don't I need to. So that picture and family tree is really important to help with complex structures.
I agree with you. Like I find that when we get a complex, the best way, I tell my team, first thing you do is draw up a family tree because then you start to understand who all the directorships or the shareholdings are, and then you can start to see the flow of money and you get a better understanding as a broker before you even lodge. Also the CRM, our CRM also has a feature now where we can draw up family trees.
That's right. We have a program that we use and you just put in the company and it draws it for you. So it's a really good visual tool to have to understand what's going on. Yeah,
look, it's still a work in progress, but it's getting there. I tried it yesterday. It was really good. The family tree, I agree. It's a great resource to have. When you're putting in an application for complex. What are the most common reasons self-employed deals get knocked back? How can brokers get ahead of them?
As I mentioned, some of the most common reasons are information on the credit report that the customer's not disclosed or they're not even aware of. And I would probably say the other one is using income the customer's not entitled to actually receive, particularly where there's a trust. We get a lot of applications where the customer is a beneficiary of the trust and the trust has rental income and they just want to use the rental income straight away. But that's not the way it works. The reason why people set up trusts is to minimise their tax. So they'll have a rental property, they'll run some expenses through it, and then the customer actually only gets what's left over at the end. So it's not a straight, easy bat through with just using rental income. So not understanding that structure and what income they can use, I think, are the main common reasons. So when it gets to us and we look at it, it doesn't serve us.
For example, in the case of that trust, we only use the net of all the income. You haven't added back interest. You only take that without the liability though.
That's right. So you haven't added back the interest. Yeah. So if you're lending to the beneficiary, you can actually only use the distribution that the beneficiary is getting. You can't use the income and things like that. And depending on the type of trust will depend on the amount of the distribution the customers get. So with a discretionary trust, for example, or family trust, 1 year they might get a distribution and the next year they don't. And part of that is the tax minimisation strategy of making sure they're not paying too much tax on it. So making sure you look at that and understand that is really important.
Is there a complex team they can speak to? Or
we actually do have a complex team. When we launched the Apollo Pro and Plus product, we actually set up a specific credit team and went out and actually hired people from the industry who had dealt with a lot of self-employed customers, knew the complex structures. Funnily enough, when we were doing the interviews, I did all the interviews with them because I'd run the pilot. They all had to sit a test and many didn't get through because of the test they had to sit. So we were very picky about who we hired.
Yeah, and credit managers didn't even know credit.
Well, not the ones we didn't hire those ones that didn't know it. So that's part of the test. Jason, I think it's really important that we understand that at Apollo, we worked really hard with brokers. It was co-created with brokers. So Apollo was built with brokers in mind, consultation with brokers, feedback throughout the entire pilot that we were doing. And going forward, we get a lot of feedback from the brokers. And based on that feedback, we do make changes. So we've just released our full policy version document out based on feedback because brokers wanted to know more about our different policies and that. And part of the reason why we do that, because I think it's really important that we all understand it's about making it easier for customers and particularly self-employed customers to get a loan and for the broker to help that customer get a loan. It's not about making it easier for the broker. We're here to help the broker understand those things, but it's all about the customer getting the loan and making it easier for them to get that. So I think that's really important to understand. And as I said, with Apollo, we work with the brokers. It was co-created with brokers and we're happy for any feedback.
And if it's easier for the customer, then it becomes easier for the broker, which then allows the broker to build sustainability in their business. So it goes both ways eventually.
That's right. And if you build a good relationship with your customers, as I said, it's a lifelong commitment that you've both got together. It'll probably last longer than most marriages.
Do you see lending to self-employed clients getting easier in the future?
At Apollo, we are always looking at ways to make it easier for self-employed customers. As I mentioned, we do have 3 different types. I think it's really important that lenders continue to investigate that because in the current economy that we have and the way people are working, we're seeing a lot more customers moving to self-employed. Even if it's working for a company and then changing to a contractor, that makes you a self-employed customer. It's important that lenders continue to investigate ways to make it easier because we are moving to that gig economy where people are becoming more and more self-employed. And looking at it, a lot of it's driven by funders, so people who provide the funding and ratings agencies and that. And I know with a lot of our policies that we've done, one we've recently changed, we actually went to the ratings agencies and spoke to them about it and actually challenged them on it. So I think if lenders continue to challenge, it could get a little bit easier for self-employed customers down the track.
We are already starting to see it as well with simple self-employed policies coming out with various lenders. Do you see it where with digital and everything's being cashless, there's a lot more visibility within the bank accounts? There's more.
I think with the introduction of CDR and open banking, it definitely will get a lot easier. But you have to remember for open banking, it is only consumers. So getting that full financial picture probably won't be there. But I think there are options you can look at. I know I've looked at options where getting access to financials via MYOB, so they're sent to you electronically versus the customer having to go to all the effort to get it. So there are some options that can be explored to make that a little bit easier for the customer and not having to gather all that paperwork together.
So if a broker wants to position themselves as the go-to for self-employed clients, what's the best way to do that?
One of the things I'd recommend is don't go for all industries. I don't try and gather all self-employed industries. Pick an industry that you want to, you're interested in and that you can learn about. I know for a lot of brokers who specialise in self-employed, they're not going to every single industry. They're not going to every single company. They're, say, focusing on medical customers or construction and understanding that industry. So when you're talking to your customers, you can walk the walk and talk the talk. Self-employed customers love to talk about their business. So if you can talk to them about their business in a knowledgeable way, that's quite beneficial. And along the way of doing that is I'll come back to that structure, really understanding that business structure of the customer and understanding what's what, how each of the structures operate from a tax perspective, income perspective, and liability perspective. I think they're the key things if you wanted to do that and move into self-employed is where I would put my focus if I was a broker.
If you could give brokers just one golden rule for self-employed lending, what would it be?
I think the one golden rule I would give for brokers for self-employed lending is notes. Brokers' notes. You've spoken to your customers, particularly if you're a specialist and you know your customer. A lot of applications that Apollo gets, we don't even know what the customer does because it's not in their notes, and you've just got the name of this business, and it's like, what does the business even do? Talk to your customer, understand what their business does, understand what they operate, and then give us those notes so we can know your customer as well as you know your customer. We love to read notes and we love to understand your customer, and you know them best.
Talking to a lot of brokers over the years, the biggest complaint I heard from brokers was that lenders will not read their broker notes over the years. But now it's refreshing to know that there's a lender out there who actually wants that and wants it in detail, because the notes is a real important piece, especially when you talk about family trees, self-employed structures, or when you're talking about multiple entities, to work out whether a client wants to go low doc, full doc. If the broker isn't breaking down the structure, understanding the client, understanding the industry, or understanding their customer and being able to relay that through notes, there's no point in doing a self-employed deal because you're not going to get anywhere.
I agree with that. Sometimes if your notes are good enough, I'll actually rip them off to put them into my notes when I'm assessing an application and looking at it. So it helps me do my job because, as I said, you know your customer better. You've had the conversation. It saves me Googling them and trying to do all my research myself to work out what they do. And I find that when a broker gives us a lot of detailed notes, the application gets approved a lot quicker. It's a smoother approval process. It's not backwards and forwards between the broker and the assessor. So I think it's really important to put those notes, and we definitely love to read them. The first thing I do when I'm assessing an application, and I know a lot of our assessors are, is go to the broker's notes. What does the customer want? Why do they want it? What do they do? Yep. What's their background? What makes you think that this is a good deal? We want to know why you think this is a good deal. Yeah.
What are the merits behind?
Yeah, that's exactly it.
What's the reason why we're putting this deal up?
That's exactly it. Yeah. Why did they choose Apollo, and what's going to help the customer achieve their goals? Both the broker and Apollo want to help their customers achieve the goals. So we have to understand what those goals are and how we're going to help them do that. Yep. We've had a few applications that have come in where they've started off as full doc. So we've had the 2 years worth of financials. I remember we had one where they wanted to use 1 year in isolation. When we looked at the 1 year in isolation, it did support it, but the business was growing. So they'd been running for about 2.5 years, and they were growing, and you could see that growth in the financials. They also gave some BAS, so you could continue to see that growth, and it was growing really quickly. Unfortunately, using the 1 year in isolation wasn't enough. So we contacted the broker and said, hey, you know what? Because we also allow projections in our light doc. If we switch to light doc, how do you think the business is going to go this financial year? Give us a light doc application, declaration of that, and we can move it to that. So we went from a full doc to a light doc to be able to help that customer achieve what they wanted to achieve.
What type of industry was that? Was it a service industry? Was it?
It was a service industry. From memory, it was, they were in computers and things like that, and they'd taken on a lot of new contracts over the last 18 months, and we could see that growth in there. At Apollo, we have a really low decline rate. We have a 4% decline rate, and I analyse that every single month. It's 4% month on month. So out of all the applications, only 4% of those get declined, and most of them aren't due to servicing. It's due to information that's on the Customs Bureau report. So one of the things our assessors really do is, how do I make this work? How do I make this application work? Our assessors contact the brokers. They workshop the deals. How do we make this work for the customer?
That's really refreshing to hear coming from a broker.
Yeah.
Because the last thing we want is a lender who is not going to work with us. You know, we are putting up a deal for a reason. We obviously have to, with all the compliance at the moment, we've got to do our back-end assessment and do our own credit checks and everything else. So the last thing we want is send it over to a lender that the lender's not working with us, not wanting to approve the deal. So it's really refreshing to hear that coming from you.
I don't assess too many applications, but I workshop a lot of applications with assessors who are doing that and working out a way that, how can we make this work?
Definitely an avenue for a broker to consider Apollo when they do have a self-employed client. I've put one in myself over the last month as well, and that experience was fantastic. Servicing is great and everything else stacks up. Definitely no reason why Apollo shouldn't be on the radar.
Thanks. Appreciate that.
No problem. At Broker Bulletin, we're all about finding those 1% improvements that lead to big wins. What's the one small thing you can do every day that has the biggest impact on your performance?
So for me, the one thing I do every day that I think has the biggest impact on my performance is I drive to work every day. This is really terrible. I live 2 minutes from the ferry and 5 minutes from the train station, but I still drive to work every day. But on that drive home, which is about 40 minutes, I really think about what's happened throughout the day, what's gone on, what I've done good, what I've done bad, and try and think about ways that the things that went bad, what could I have done that was different, so that when I come in the next day, I don't take those into the day. I have to say, depending on how bad the day is, depends on the music I'm listening to and the level of the music. Sometimes I get a lot of people looking at me as I'm driving along and House of Pain's coming out of my car. So I can tell you it was a bad day, but if it's quiet, it was a good day and I don't have a lot to reflect upon. So that's the one thing I do to improve my performance every day.
Jacqui, thanks for coming out and talking to me today. The biggest takeout I took from this chat was Apollo really appreciates a broker that will put in intense notes and draw up a tree. Because from my experience, I find that drawing up a tree, and I agree with you, is a big part of understanding the client. And I find it's a point of difference when a client comes to me as opposed to another broker, especially when there's multiple structures. I find it as a point of difference where we've taken the liberty to go in and understand the customer's structure and understand their business. And I find that the clients tend to be more sticky when that process is taken on board. And then to know that there's a lender who will actually take on that and read it and understand it and work with us is very refreshing. So it's a big takeout for me. So thanks for having you.
Thanks, Jason. I appreciate that. And I agree. It is a big standout for the brokers. Customers love their business. Otherwise, they wouldn't be running it. So the fact that you take the time to understand their business, I think makes them a lifetime client for you if you can do that as a broker.
Definitely agree. Thanks so much for listening. If you have a topic you want to discuss with us, please email us on brokerbulletin@lmg.broker or DM us on Instagram @lmg.broker, and our producers will make sure we answer it. If you like this episode, please make sure you rate and follow us in your favourite pod store.
Thanks for tuning in to Broker Bulletin. We would hate for you to miss an episode. Subscribe to Broker Bulletin in your favourite podcast app. Has this episode been helpful? We'd love you to rate and review us. It'll help us deliver content that's useful to you and help others discover us. If you have great ideas for topics worth tackling or have burning questions you'd like addressed on an upcoming episode, reach out. Links in the show notes. See you next time.